And as you know, CEOs have not been that confident for the last 2.5 years because the Fed's been running tight monetary policy. The ISM's been below 50 for 31 months now. That's the longest stretch in history. I think the sell-off Friday is giving us a bit of a gift because that surge in the VIX, a 32% rise, is the 39th highest ever one-day surge. And the 1-month median return is almost 3%. Of the 38 other instances. So I think the S&P could add, 200 points between today and mid-November.
That's a scenario I don't really think a lot of people are even considering right now. Whereas 57% for Bitcoin dominance was always a level we talked about it potentially going down to, because that's exactly where it went to, on this trend line the last couple of years.
Wall Street's atmosphere turned electric as markets tumbled and panic swept through trading floors. The VIX, often dubbed the market's fear gauge, spiked over 31% in a single session, marking its biggest jump in months. Stocks sold off across the board, with the S&P 500 briefly slipping below key support levels before clawing back slightly. Yet, history often rewards moments of panic. Sharp volatility spikes like this have frequently preceded short-term rebounds, hinting that today's chaos could lay the groundwork for tomorrow's opportunity. Tom Lee sees the recent sell-off not as a collapse but as a reset. He notes that CEO confidence has struggled under the Federal Reserve's relentless tightening cycle, while the ISM Manufacturing Index has stayed below 50 for more than 30 months, the longest stretch on record. To Lee, the surge in fear was a pressure valve releasing rather than a sign of breakdown. He believes the S&P 500 could rally nearly 200 points by mid-November as markets digest the fear and prepare for recovery. Meanwhile, Ben Cowen is watching the crypto space closely. He argues that sentiment is shifting back toward Bitcoin, with its dominance stabilizing around 57%. As risk capital exits altcoins and investors seek stability, Cowen believes Bitcoin could once again serve as the market's anchor, the safe harbor in the storm. Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
In fact, I think JP Morgan's announcement today really ties into why investors should stay pretty constructive on the U.S. I mean, JP Morgan, the biggest and the most powerful bank in the world, is investing $1.5 trillion into the U.S., into things that are going to strengthen sort of U.S. advantages, critically important areas. And at a time when the U.S. is dominating AI, and of course now we have this big tailwind as blockchain is an initiative that Wall Street is building products on. So I think there's a lot of reasons for investors to stay optimistic. And I know there's a lot of talk about bubbles, but I think the thing I would just continue to point out is NVIDIA trades at around 27 times forward earnings. It's still on a PE basis cheaper than Walmart and Costco, which trade at around 47 and 34 times forward earnings. And as you know, CEOs have not been that confident for the last 2.5 years because the Fed's been running tight monetary policy. The ISM's been below 50 for 31 months now. That's the longest stretch in history. I think the sell-off Friday is giving us a bit of a gift because that surge in the VIX, a 32% rise, is the 39th highest ever one-day surge. And the 1-month median return is almost 3%. Of the 38 other instances. So I think the S&P could add, 200 points between today and mid-November. I think conviction is a measure of whether or not the market is, pricing in too much good news. I think with Friday's sell-off, I saw many people calling the top of the markets or declaring that the bubble is bursting, or that, this is the reason to be buying gold. And if investors are that quick to call a top just on a 2%, 2.7% decline, I just think a lot of good news isn't really priced in. I think there's still a lot of reluctant investors on the sidelines. There is an interesting correlation we found, which is when I look at Tether's supply of dollars outstanding, it really started to rise about 3 months ago, and that corresponded with gold essentially going up every day. I'm not positive of this, but I think stablecoins, including Tether, may be one of the largest buyers of gold today. There's always been a lot of leverage in crypto. I think that the volatility and leverage is what has drawn people into that space, especially when you get outside of Bitcoin and Ethereum. Those two are generally not held on margin. I mean, there is some leverage with what they call perpetuals, but that's why they held up so well over the weekend. But this liquidation that was triggered over the last 3 days, the estimates are at least 19 billion of liquidations, but it's probably understated. It might be 4 times bigger. It's the largest since 2021. Essentially, you have to go back to FTX. I think there is a lot of leverage in the way people use this product called perpetuals, which is trading on margin, like 3x, 20x. And it lurks and it's held through collateral. People like sort of pledging something that thinks it's safe, but when the price of that collateral drops, it triggers a cascade. Right. And so I think people talk about this thing called auto deleveraging. So a lot of leverage. Yeah.
Markets are still staggering from one of their sharpest shocks of the year. On Friday, the S&P 500 plunged 2.7%, while the Nasdaq dropped nearly 3.6%, erasing weeks of cautious optimism in just a few trading hours. The CBOE Volatility Index, or VIX, surged about 32% to above 21, its highest level in months. By Monday morning, futures hinted at a potential recovery, but uncertainty lingered. To some, this was the start of a market correction. To others, a violent reset that might pave the way for a more sustainable rally later in the quarter. The unease wasn't confined to stocks. In the crypto markets, traders faced a brutal wave of liquidations that wiped out nearly $19 billion in leveraged positions within 24 hours, hitting perpetual futures and altcoins the hardest. Bitcoin held relatively firm, but the chaos exposed how much hidden leverage still lies beneath the surface of digital assets, and how quickly it can ripple into broader markets when volatility spikes. The crypto crash mirrored the equity slump, serving as a stark reminder that speculation remains high and risk may still be mispriced. Whether this moment becomes a rebound or the start of a deeper downturn will depend on the next few weeks of economic data. If inflation continues to ease and the Federal Reserve signals potential rate cuts by early 2026, markets could regain their footing. But if bond yields remain stubborn and confidence continues to erode, last week's sell-off might only be the opening act of a more turbulent finale. While Tom Lee expects a rebound in traditional markets, analyst Ben Cowen sees capital quietly rotating back into Bitcoin, a sign, he says, that confidence always returns first to strength.
I will say with something like Bitcoin dominance that we've talked about a lot, one of the things we mentioned was that it would likely find a low in September and then build off of that low, and that dominance should go up for basically all of October after forming a low in September. Now, what's really interesting is that just about every week, someone's reaching out and saying, well, what about Bitcoin dominance? Like they feel like it's not going up. But it is, right? Like it is. And, if you look at it right now, about a month ago, the week of September 8th, dominance was at 57%. Now, it's the week of October 6th. So about a month ago, right? Now, a month later, we're now at 59%. So dominance is going up, right? It is moving higher. We are seeing alts, that liquidity in the altcoin market. We are seeing it go back to Bitcoin. It's happening. It's just not obvious to people yet. But I think the rotation's already underway. There are times where it takes a little while, right? I mean, people are like, well, you said dominance would find a low in September. You said it would go up in October. And I'm like, guys, like that's what's happening. Like there's the narrative that, you're potentially being fed. And then there's what's actually happening, right? And dominance has found a low in September and it's been moving higher. And, if you go back and look at other years where we've had similar types of moves, 2020, we've made the comparisons to 2020 for Bitcoin. And one of the reasons for that is just kind of this idea of a capitulation low, up, sideways, and then down to the bull market where it been 2 weeks up, 2 weeks down, and then you break through in October, right? That's the same thing that's happened this year. You have your capitulation low, you go up, sideways, up 2 weeks, down 2 weeks, and then you break through in October. It's really similar. And when you look at what Bitcoin dominance did back in 2020, it was around these same levels. In fact, the week of October 5th, Bitcoin dominance opened the week at 59.35%. The week of October 6th, Bitcoin dominance opened the week at 59.31%. So it's basically the exact same level today as it was exactly 5 years ago. And it took a little while. I mean, back then you can see that dominance found a low here, the same time frame, and then it started slowly moving up. No one really believed that it was, right? It felt like, people were still calling for alt season. And then before we knew it, once we got into mid-October, maybe about a week and a half from now, that's when Bitcoin dominance shot a lot higher, right? And in 1 week, it went from 60% to 62.5%. So I think it's relevant to remember that, it might not feel like the rotation is happening. Like, it might not feel like it is, but it is. And if you go look at altcoins on their Bitcoin pairs, like, you can see that they found a high in September. And in 2020, you can see that alt Bitcoin pairs were about the same level as they are today. October of 2020, alt Bitcoin pairs were at the same level. And some people are like, well, how could they go down and then still get another move up? I mean, look at the chart, right? I mean, in 2020, they had this massive drop into early November, and then they got a bounce, and then they had another drop into December, and then they got another bounce, right? And even in 2017, alt Bitcoin pairs rallied on up. And, the week of October 9th, in October of 2017, alt Bitcoin pairs were at the same level that they're at today on October 10th. And back then, alt Bitcoin pairs still dropped from 0.4, which is where they are right now, all the way down to 0.25. And then they rallied, and then they dropped again to 0.27 in early December. Again, as a reminder, when you go look at monthly returns of Bitcoin dominance, what you'll see, as we've covered, is that October is the best month usually. And we've only just begun. And so you have to remember that there's plenty of time in October for dominance to head a lot higher. Okay? And when you look at where dominance opened the month in October of 2020, it opened the month at 59.12%. Where did we open up at October 2025? 59.03. So they both opened the month at 59%. And then 2020 October dominance ended at the month 64%. All right? In October of 2017, dominance went from 54 to 64. 54 to 64. So at the end of October 2017 and the end of October 2020, Bitcoin dominance found itself at 64%. So we have to remember, in order for the bull market to continue, liquidity must flow to the king. Okay? Ethereum does not lead the bull market. Solana does not lead the bull market. BNB does not lead the bull market. None of those things lead the bull market. Bitcoin leads the bull market. And if Bitcoin ever stops leading the bull market, then the cycle's in the final innings. Usually by the time you get an alt season, the cycle's over. right? So you might have a month or so. So basically, the people that keep calling for alt season keep calling for the end of the cycle.
The winds in crypto are shifting once again. After months of sideways movement and brief altcoin rallies, momentum is quietly turning back toward Bitcoin. This rotation isn't flashy or fueled by hype, it's slow, steady, and backed by data. Bitcoin's dominance has climbed from about 57% in early September to roughly 59% by the first week of October. A 2-point move might sound minor, but in crypto terms, it's significant, a clear signal that liquidity is flowing out of altcoins and back into Bitcoin, the market's main artery. We've seen this story before. In 2020, Bitcoin's dominance sat near 59% in early October before shooting to 64% by month's end, the start of its legendary run towards $60,000. A similar pattern played out in 2017. Altcoins surged, sentiment peaked, and just as traders declared alt season, Bitcoin took back control, driving dominance from 54% to 64%. History doesn't repeat perfectly, but it often rhymes, and the rhythm right now feels all too familiar. Each cycle delivers the same lesson. Bitcoin leads, everything else follows. When liquidity tightens, investors stop chasing narratives and retreat to strength. October has historically been Bitcoin's strongest month for market share, and this one appears no different. For traders hoping for the next 100x altcoin, this shift might seem discouraging, but rising Bitcoin dominance isn't a bearish signal, it's a sign of capital consolidation before the next major rally. In every bull cycle, dominance surges first, liquidity stabilizes, and only then does the real bull market begin. History doesn't promise results, but it does leave clues. The rotation back to Bitcoin isn't coming, it's already happening. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.